With us once again, folks, is Mark Collinsworth, the CIO, the Chief Investment Officer of Vere Global Wealth Management. And we're just here to talk about the happy news. It's a holiday season. There's presents on my tie and presents from Joe Biden to the American public and to Wall Street. All this news is good. The Fed is going to cut rates. Everything's going to go up. Right or wrong?
Thank you, Larry. Yes, that's actually kind of correct to a degree. So the Fed, in the meeting they had this week, have actually shown very strong signals they're going to cut interest rates 3 times next year. Now, what's odd about that is the meeting that we had just 6 weeks ago with the Fed, they made it very clear they were going to make no rate cuts whatsoever in 2024. So what's happened, Larry, in the last 6 weeks?
Hmm.
Well, people are becoming very concerned that almost $3 trillion in US debt is going to mature in the next 2 years, and we're already paying $1 trillion in interest. We have to borrow $1 trillion now each year just to pay our interest payments. Well, that $3 trillion that's maturing has a 1% interest rate on it right now. If it matures, it will reset at almost 5% based on where current rates are at. You think $1 trillion in interest is a lot now. That $3 trillion resets at five. You're looking at a lot more money than just a trillion in interest. Think the Fed's cutting interest rates to help the government out on its interest payments on its debt. But more importantly, because Joe Biden's popularity ratings have plummeted so much, and Donald Trump's popularity ratings have increased by so much to counter on the counter side of that, I think the Fed is cutting interest rates to help Joe Biden get reelected in 2024.
Would they be that cynical about the nation's economy and
Well,
future?
Well, yeah, because being the Federal Reserve governor and being like the U.S. Treasury secretary, those are pretty cool jobs, right? Donald Trump doesn't like Jeremy Powell or like Janet Yellen. They're on the chopping block. If Donald Trump gets in there, they're losing a job. So, for job security reasons, let's cut interest rates before we have to save our jobs.
Now, Wall Street's buying it. Wall Street closed up way high this week, right after it was announced that
Oh,
the rate cuts are coming sooner than expected.
oh, Larry, let's face it. Wall Street couldn't give a flying hill of beans to what happens to the people on Main Street. If they can make money on it, they don't care how they make money. They're just there to make money.
Well, now, Mark, it's what I'm curious about is the short-term fix boost for political reasons. Will, in the long run, that damage the economy more than it would have been damaged, considering the way the economy has been heading for so long?
Yes, it will. It will actually cause a partial problem because the inflation rate's actually above the Fed's target rate they want to achieve. By cutting interest rates at this point, I believe a certain portion of that inflation rate is going to become permanent. And kind of the issue kind of back up. Why do I think the Fed's doing this for political reasons? If you look at the economic data, let's say right now, 50% of your economic data is barely in the negative zone. The other 50% is borderline going into the negative zone. Historically, when the Feds cut interest rates, every one of those economic indicators are way, way, way into the negative red zone. That's not happening here. So why is the Fed cutting interest rates when all the economic data points are not deeply in the red zone? Like, look at the unemployment rate. We're still creating about 100 to 200,000 jobs per month. Usually the Fed doesn't cut interest rates until you see the economy losing 100 to 200,000 jobs per month, not while they're creating them. So why the change in the historical policy? Election year.
Yeah, let's keep in mind the Fed has been raising rates, one after another, in order to bring inflation down. Now, all of a sudden, they're cutting it prematurely. So it's another sleight of hand then to give an illusion of a recovering, increasingly healthy economy.
Correct. It's just like in the Wizard of Oz, when you pull back the curtain, you have this man here creating all these magic tricks and illusion, and that's really what it is. It's an illusion to make people think things are better when they're really not.
Yeah. Well, again, I keep asking you this question, where the economy is going long term. We keep hearing more and more alarms about the dollar losing its reserve status, which would be a disaster economically. We hear more and more about other countries challenging the supremacy of the dollar and how the U.S. position as a global hegemon is being weakened. Do you agree with those alarms?
Yes, but this is one of the things people don't realize is that when you have problems like this develop, these problems don't just take 2 or 3 years to develop. They normally take years and years, if not decades, to create themselves. A perfect example with the housing bubble that blew up in 2008. You have to actually go back to 1999 to actually find the roots of when the housing bubble actually started. So to answer your question about the dollar losing its reserve, yes, eventually it will, but I think it'll be years down the road. And by that time, people will see, well, I've been predicting the dollar to lose its reserve status for years and it never has. I must be wrong. And that's when the point when people start throwing the towel in saying, I was just wrong, that's when everything goes to hell in a handbasket.
No, for our viewers that may not be familiar with this whole issue about the reserve status and why it is so important and why it would be a disaster if the dollar lost its reserve status, could you explain that in layman's terms for us?
Sure. So if you want to buy oil, doesn't matter which country you are, if you're France, Germany, Tunisia, Zimbabwe, whatever. If you want to buy oil, you can only buy oil in US dollars. So that means
Why is that? Why is that?
because that is a deal that the United States government actually cut with OPEC decades ago. And pretty much the premise on that was basically you make the dollar the or the petrodollar that all oil has to be traded with on the based on the US dollar. And you basically have, unofficially, it was like we'll give you the luxury of our military. That's why the military, US military, is always so big on protecting the Middle East, is because that's part of the unofficial um, deal they cut for making the dollar the reserve status dollar.
Okay, so because of that deal, oil globally could only be purchased in dollars so far.
That's correct. And the reason why that's important to interest rates is when these governments go out and they have to buy, let's say, 10 billion or 20 billion dollars in US dollars, so they have that tap into the to trade their oil with, they just don't go out and get $20 billion. They get $20 billion in US debt because that $20 billion is earning 5%. That's a lot of money to earn on 20 or 30, $100 billion. So those are the main buyers, the main reason foreign countries buy our bonds because those bonds are priced in dollars and pay interest in dollars. That's the main buyer. That's why so many foreign countries buy our bonds.
Well, it seems like a pretty good circle of circling the dollar back to us. Why won't it continue to work that way?
Well, some of your bigger countries, like let's say Russia and China, are getting very fed up that the US basically gets to dictate so much power in the world on, hey, if you don't do what we say, we'll make sure your country never has any dollars to purchase. We'll refuse them to sell bonds to them or something. Now it's kind of a long shot, but if you have a competing currency, why would you want to buy just US dollars? Go out and buy your oil in euros or buy them in rubles or something. That would make people want to put money in euro-based debt than dollar-based debt. And if people aren't buying, have exclusive reasons to buy US debt, well, then interest rates in the US will go up to try to make those people more eager to buy US bonds. Higher interest rates will draw more attention to us.
But in order to establish that scenario, OPEC would have to do what? Agree to sell oil in currencies other than the US dollar?
Correct. And you see,
What?
that's going to get to, well,
How
it just
likely?
won't be OPEC.
How likely is that OPEC would?
It's getting more likely when OPEC had negotiated all these deals. Roughly about 60% of your entire oil supply of the world came just from your Middle Eastern countries. Now that number has been cut almost by more than half. Now so much oil comes from, Russia, uh, Indonesia and stuff that there's now reasons for a competitor to actually step in. And since we're on the subject, I'll even throw a kind of one of these conspiracy theories out there. When the um, when the United States invaded Iraq, Iraq was about 6 months away from actually opening up its own euro exchange to actually trade oil based in euros and not in US dollars. Kind of, I'm not saying it's a conspiracy theory. It's just kind of interesting that the United States invades Iraq 6 months before they're supposed to start selling uh, oil in euros versus dollars.
So what you're saying is that these other countries that are not bound to OPEC, that have lots of oil to sell now, could be selling their oil separate from this OPEC deal to sell it just in dollars. And they could make that work because now they have so much volume of oil, all these other non-OPEC countries.
Correct, because now we've discovered oil in so many countries. There's a lot of non-OPEC countries that now have a lot of firepower under their thumb to actually pressure the U.S. dollar to lose its reserve status.
Can the U.S. stop that?
Not really. I have a feeling what's going to happen between now and then is there's going to be a lot of deals cut behind doors. So let's say South Africa wants to go to back. South Africa produces a lot of oil. Let's say they want to go to using the euro or something. I'm sure there'll be somebody from the United States government will make a visit to South Africa and say, "Hey, we'll give you $20 billion in financial aid for free if you keep the US dollar as the reserve status for your country." And that's one of the reasons the United States has run up so much debt over the decades is they've just cut so many deals with so many countries. I mean, look, how much, what's the number now? Ukraine, we're at what, close to $100 billion we're giving Ukraine?
And more on the way. Yeah.
Yeah.
Yeah. Getting back to the rate cuts, though, as we wrap this up, uh, what was also unusual, what the Fed did was telegraphing the future rate cuts. Usually, they don't do that, right? They keep the market guessing so that nobody could anticipate it and make moves ahead of time that might actually screw up what they're trying to do in terms of controlling inflation and steering the economy correctly. So by telegraphing it, putting it out there, that in itself was highly unusual, was it not?
Well, they in the past they have telegraphed the move ahead of times, but this was a pretty strong telegraph. It was one of the strongest telegraphs I've ever seen. And in this scenario, they didn't actually cut interest rates at this meeting, but because they said they're anticipating cutting rates and sent such a strong message on it, they caused the 10-year Treasury bond yield to drop about 30 basis points.
Yeah.
And the reason why that's important is because mortgage rates are based on the 10-year. So because they verbally said that and you saw the drop in the 10-year, here in about another 5 to 10 days, you're going to see a fairly large drop in mortgage rates.
Well, Mark, do you think though, I mean, you're an economist, you do it professionally, you understand all these machinations, but do you think the public will buy this? That, Joe Biden is bringing them presidents playing Santa Claus just in time for Christmas and the economy is on the upswing. Do you think the public will be reassured that happy days are coming again, or will they not buy it?
Most people that look stuff don't understand what goes on, day to day. They come home, watch the news for 15 minutes. They may pull up their stock portfolio and say that it's up. They don't know the reasons behind why it's going up. They just know it is. So it's just a dog and pony show. The voters will vote because they see their investment portfolios going up, but do not understand the complications of what's going to occur long term because of that.
So this may actually increase Biden's chances of reelection.
And I really think if you put a gun to my head, based on everything I've seen, I would say the Federal Reserve is making this move at this time purely to try to assure that Joe Biden gets reelected next year.
Okay, whether it works or not, time will tell. Mark Collinsworth of Vere Global Financial Wealth Management, thanks once again for clarifying some complicated economic issues. Thanks.
Yep. And as always, it's always the darkest before everything goes to hell in a handbasket, unless you're the Federal Reserve trying to save your job.
How reassuring. Mark, thanks. See you later.
Thank you.